Hey everybody, Joshua Phillips, Churchill Mortgage here with your weekly market update. Today is December the 6th. It's actually a cold one where I am, and hopefully maybe it's warmer where you are. But let's just jump into these charts. I'm actually excited. Wasn't able to do a market update last week because it was Thanksgiving weekend and just had family in town, other things to do. But I'm excited to come to you with the market update today. We're going to jump right into these charts here. If you've seen my videos before, you know what we're looking at is a mortgage-backed security chart. Mortgage-backed securities are where mortgage rates derive their value. And as I've said many times, every professional loan officer in America has this screen up on their computer every day, watching the market, seeing what's going on. And these are Japanese candlesticks. All you really need to know to understand this chart is green is good, red is bad, and the higher the security price, the better mortgage rates are doing. Now, this is a little bit technical here, but I want to nerd out for just a moment. So again, if you've been watching my videos in recent weeks, we were kind of going along the bottom. We saw several months ago, we saw mortgage-backed security prices reaching a high for the year and mortgage rates reaching a low for the year, but then we fell off the cliff there for a while. But we kind of found this, what we call level of support. Man, we hit that over and over and over. For 2 or 3 weeks, we just kind of kept hitting this level. And it really became what we would call a floor of support. That's a good thing because it formed a floor of support. And my hope was that we would start bouncing up. And that's what we've actually done. You see the green candles, up, 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 up. So that's good. Mortgage rates have been improving the last 2 to 3 weeks. Now, these little lines here, you can see right here, 200-day moving average, 100-day moving average. These lines represent a moving average. Take the red one, the 25-day moving average. That's what the price has been averaging out the last 25 days. Now, these are powerful lines of either support or resistance, but the good news is we have been breaking through. We broke through the 25. We broke through the 200. We broke through the 50. And then today, looks like we're going to close above the 100-day moving average. So we have actually broken above all the moving averages, which technically is good sign for mortgage rates moving forward, meaning mortgage-backed security prices are going to improve, mortgage rates are going to go down. That's what the chart is showing us. Now, there's always things that can happen with economic reports, with global conflicts, all sorts of things that can come up that can disrupt these charts, but the charts look good. Now, we've still got a ways to go. Let's see if we can let's pull this back to like a 6-month chart. So we still got a ways to go before we're back to where we were in September when mortgage rates were better. We're kind of like we've kind of bounced like halfway back. So, I mean, we still may, if it keeps on this trajectory, it's still going to be another, if things went well, 3, 4, 5 weeks before we're back where rates were in September. But hey, at least we're heading in the right direction. I would consider this a breakthrough over the last 2 weeks with mortgage-backed securities breaking through all the levels that they've been resisting. So I'm excited about that. Now, let's switch gears here just real quick for a moment. I want to show you this chart right here. Let's see if it'll pull up for me. There it is. Okay, it's coming up. So many of you want to know, like, what are mortgage rates going to do next year? Now, this is a chart that I found that what it's taking is what Fannie Mae is predicting, what the Mortgage Bankers Association and Wells Fargo. I don't know why Wells Fargo. And it's averaging out all three. Now, as you can see, and this really just jives with what I think is going to happen, which is, very slow decline next year with mortgage rates remaining in the 6s. That's what we're anticipating. So nothing dramatic, but slow improvement. And of course, it's never just, it could be up a little, down a little, but over the year, that's what these three entities are projecting. That seems true to me. Now, I'll say this. If you look back a year ago, if you look back 2 years ago, these type of predictions, which I've seen many times, they have been wrong every time the last 3 years. So take it as a grain of salt, but from where we're sitting right now, this seems pretty true. Rates in the 6s next year with rates slowly declining. So I think that's where we're probably going to land. Well, anyway, hey, we have seen mortgage rates improve. Hopefully they're going to continue to improve. Hopefully we're going to get back to where we were in September and even better. Let's just hope for the best. So, hey, anytime you want to talk about your specific situation, you want to talk about what mortgage rates are available for you specifically, maybe strategies on paying points or what you qualify for, I'm certainly here to help. I know my wife Amy's been sending these out as well to her clients. She works for Churchill Mortgage as well. Amy Phillips, she's great. And feel free to reach out to Amy to discuss things as well. Anyway, have a great weekend. Have a wonderful Christmas season, and we'll be in touch soon. Bye.